Well, okay, go ahead.
You opened it yourself?
I opened it. No, on air, go to the CS hole.
I don't see it. Whatever you're opening right now, it's not showing up for me. So it's not that, but you can find it there from Spix. Yeah, and there's something else there.
Ike, go ahead. Have you figured out any theories about what's going on? About the one with 3 greens, 2 reds, red, green, red, red.
Listen, well, I go by the average. So actually, I mostly look at the average and move upwards. And usually, if I jump up and pause for a bit, I try to go long. If it jumps and returns to the average, I try to go long. For example, if it just stays there for a long time, you can also try to go long there. Then during sharp drops, in principle, you can slightly increase your risk, for example, by buying some calls.
Maintain the position at a commission of 0.1%.
Yes, yes, set them like that. But now it will be easier for you because now you're trading S&P weeklies. So the commissions won't eat into your profits too aggressively. So basically, it's going to be pretty decent here. All right, go ahead.
Did you change the margin? Is that amount in dollars? Margin, where's my contract?
The margin is the contract. Actually, that's correct. The margin, that is with what leverage you're entering, with the first, second, or third.
Ah, wait, so it's holding. I actually need to short. That's right. I'm doing something wrong. I opened in the wrong direction. All right, let's go. It's holding. Let's do more. Awesome. Well, after such a long one, I think it'll just stay put. A couple of candles? Well,
I would probably, yeah, bet on it staying flat. Usually there are one or two stagnant candles, so basically there could be one more that just stays.
yeah, it's holding steady all the time. That's great. It's always interesting to see what happens next after such strong moves. It's also moving towards the middle puppy.
But I don't know. I also think it'll stay, but I mean, I don't know. It's up to you to decide. Like, I would say,
That it'll stay for 2 candles. It has remained in place. Exactly where it was. It often stays.
but now I think it could grow. There was a risk. You didn't make it in 10 tries, but
Let's have it stay for a second desert as well.
10-10, it definitely should stay in place.
Go ahead.
All right, I honestly just knew it was going to happen, to be perfectly honest. Ah,
And now, well, it has just come up to the middle, it turns out, and it should bounce back.
yeah, right now I would start actively buying calls, at least there, 3 or 4 candles. Well,
Go ahead. All right, go ahead.
did you click it? I just didn't see.
No, I didn't click. Hold on. I'm scared. I'm afraid of this S&P. I placed it again. Well, I have to say we entered this one quite well. Yeah, I definitely agree. Ah, this is really something. A bit of adrenaline. I almost need to catch my breath. There's a strong move right now. I think people kind of freaked out a bit, right?
Yeah,
I'm even ready to risk it on 6 that they'll just sit through 2 candles now. One, they sat through it.
sometimes they definitely just sit there. But for the third one, you could go for 12, and I'm sure it probably won't move much further.
Didn't you get the feeling that this S&P works more like an oscillator? It's going to swing like that now.
Yeah, but it's just about that predictable, just a little bit. The only thing is, it works well for longs. Why didn't you go for 12? I told you you had to see it, just a bit of risk. Now it's already 12. I don't know. On the second candle, I was more confident there. Now, come on.
Go ahead and take a look. Well, now it actually looks like it just bounced right off that moving average line, doesn't it? It seems to be holding steady for now.
Now it's 12. I mean, no, no, no. Now for sure it'll stay in place.
You think so?
Well, almost.
Right now it's holding steady, even inside the SMAs now.
Yeah, that's it between the averages. I think now it definitely won't go anywhere further.
Oops, I
I think 3
candles. I think,
2 candles, I think 2 more are possible.
yeah, yeah, that's good too.
Although I think maybe it could last 1 more actually.
Let us go ahead and place 6 of these items right here in this spot.
Now it's not so scary. Yeah, it's good that we put 6. I just knew it would go.
Well, let's buy. No, I mean, I suffered. No, let's just do the calls later. So, where exactly are the calls now?
I personally think
It was worth it. I think it'll take off again.
it will take off, but only really quite hard, actually.
That's how I would have done it. There you go.
Well, how is it? It's fine, it's fine.
And the candles, but right now I'd say it'll hold for a bit. Go ahead. I actually pressed it twice.
Oh, you pressed it twice?
The button slipped. Currently debugging the game's code.
Yeah, I'm sure that was just you. Actually, I didn't want to press the last 2. They were just in case not.
I really didn't want to. I did not want to, I swear to you. God knows I didn't want to. Let's do it like this. Let's meet at 6. It frequently ultimately depends on the individual participants involved.
If I was right, then it definitely won't drop.
It is going to crash. Come on, come on. It'll crash any second now.
Actually, about going down after a rise, it goes down really badly here. That is corrections on a decline. They usually come as a sharp rise after a correction during an uptrend, but often they just move sideways. That's why active buying happens here. With puts, it seems like you're buying in, but it doesn't really give you anything. It's good to go down after it has stayed at the top for a while, like after it rises, then drops a bit, and then stays there for, say, 8 weeks. And that's when it actually works out pretty well. But when you're right in the middle of a sharp rise, and you decide to buy some put options, but then you just see these tiny little candles forming, well, I mean, it's frustrating.
It's a pity there aren't any covered ones. We need to add them.
It's scary without coverage. I keep thinking, what if it suddenly shoots up?
Of course, we're doing it right. 6.
Yeah, but you see, in this case, a covered one wouldn't have helped much. It didn't shoot up that hard, but it did go up.
Now it's going to shoot up.
It definitely smells like it, but later on,
Come on now, come on. Please, come on, come on. Well,
well, so far you're doing pretty well. It's been just over half a year and you're down 25%. That's a decent result.
although it might seem quite challenging at first glance, there are several ways to approach this situation effectively.
But you didn't do a buy-in because of that average.
A buy-in from the average? Why?
It's from the average. I wanted to draw your attention to the fact that very often this thing, you see it goes right with the tail. Here it was like this, here it went through it, and right before this case that happened, if you increase the X scale, I think it's X, you'll see that the previous one also landed on the average. No, I mean, yeah, even more. Inputting,
Is not allowed? It's inconvenient.
it's inconvenient basically somewhere around here. Remember, we bought very successfully right here, but over there it went up by 20%.
All right, sure. Let's do Baikal. Does any option work with this, Sempi? So, well, the sessions are up, but not by much, kind of up, but not significantly. Yeah, it turns out there were a few green ones in a row as well, but I think now it's going to shoot up a few green ones.
Not by 10 sesh, not by 10. I think it's about 5% now, nothing drastic. There was a good signal there. I think in the market, it's really important when you're absolutely sure. That's when you can go all in and everything else. You just test the waters a little bit. I think that's how you'll get better results. Well, yeah, that's right. But still, was it 10 that made 5%?
And now coming in at number 5.
Percent risk? Well, I get it. Yeah, that's kind of a swashbuckling style of trading.
You want to make money faster?
But by the way, look, pay attention. Let's lower it a little bit. Now,
You might really want to consider doing this.
say that I'm flipping a coin.
Flipping a coin again? No.
What I wanted to say. Do a show constant risk mod backtest. Here, minus 6.33. All right, got it. Then show buy and hold. How do we compare to buy and hold? Well, great. We could have just sat in the portfolio. That wouldn't have been bad either. But that's not interesting for us, so
That doesn't offer any prospects.
agreed. And most importantly, it doesn't give you the feeling that something depends on you. You don't want to be the most independent country in the world.
Yeah, yeah. You really went overboard with the country thing, but you...
Do you know, by the way, which is the most independent country in the world?
North Korea?
No, Mongolia.
Why?
Because nothing depends on it.
The Mongols wouldn't be happy about that.
We'll cut this part out of the recording. And because of that,
Where is it going to go now?
what range are they giving if you stay put? What range? Honestly, right now I would just do it, but for one position, I would just skip one trade.
In order to successfully generate a sustainable profit.
No, I think, by the way, it went out a little, so it's not a fact that we made a profit. But now it seems to me it's more likely to go a little down, a little or maybe a lot down.
Cool.
Whether it is a little or a whole lot down worked out, that's good, but at the very moment before you press the button, it's all regret.
So that is exactly how it is going to be. And now it will simply stay this way. Don't you agree?
Yeah, now it'll just stay. But it didn't stay as much as I would have liked, by the way. Right now it's the same. So when it chops like this, the point is that the decrease in volatility can last quite a while. Maybe for another 1 or 2 candles. I don't know. Well, by the way, you see it's a little plus, but it already started to crawl out somewhere.
It's kind of scary already.
No, one more time. I think it's possible. It wasn't allowed, but long buy call. Now it's buy call.
Oh, because it's going to bounce off the moving averages now?
Yeah, but not the whole amount. Let's do this to keep a reserve just in case we need money left if it doesn't bounce.
Well, 5?
Yeah, 5 is fine. Let's try 5.
And 34.55, what's that? Is it Fibonacci or something?
Yes, that's Fibonacci. Yes, that's the golden ratio.
All right then. Let us go ahead and get started with it. Boom, no.
Okay. One more time.
Yeah, well, honestly, that's an option. Everything actually worked out in the end.
And the wallet shows constant risk mode backtest. Yeah, and look, see? Your constant risk gives you 12%, so let's set it. Right now, the risk is set at the very top. 5? That's not 5%. No, you're changing the commission. No, the risk is the very left one on Antica. Set it to 1. Tell me, what was the constant risk? What was the yield? Check the box. 4.2. Okay, a 2% risk. 7.5%. So that makes it 3% total. 10. I'll try to put 10, for example. So you see, it turns out that you're basically, well, almost on the edge. It seems to me, give it a 4.5.
I don't remember what I did.
Note that if you were to take risks here and trade with a constant risk of 10%, you would be at break even. They would be in profit, but I mean in profit, but just barely. So starting from a certain risk level, even though it seems like you should be making more, in reality, you end up earning less. And this is an interesting feature. Once you go beyond a certain percentage of risk, at some point, you just can't get out of it. the gentle curve there, it looks exactly like this. So it turns out that if you start taking big risks, you might end up here, but by taking much less risk, you could end up here and your income would be the same.
I need to think about it. I didn't get it.
If you risk a constant percentage of your capital, say 100%, then each time you lose less and less, but you also earn less. So, for example, if you drop by 50% to get back to where you were, you need to earn 100%. Accordingly, if you don't lose as quickly, it turns out that you lose 1, earn 1, it's about the same. But if you lose 10 and earn 10, then in reality, you're already down by 1%. So if you lose 1 and earn 1, you're at minus 0.01 or something like that. Then if it's minus 10 plus 10, you're already down by 1%. That's why once you start increasing the risk, things start to get depressing. Let's continue.
Yeah, by the way, yes. Do you consider 4.5 optimal?
Well, you see, actually, you did pretty well, because in principle, you really have to be extremely careful if you ever decide to go much above 5. I think you could try to sell. What do you think?
So, am I right in understanding that the greater the risk, the more it should be accompanied by a special confidence in what will happen on the market?
Well, either with special confidence or you have to be super careful. For example, let's say you have a series of 10 red candles and you understand that now there's a high probability of a green one appearing. Then yes, you can speed up to 10, maybe 15 even. Well, I mean, at least on some small accounts and so on. And it's easy to charge 15 when there's some kind of situation. If you bet 10 here with constant risk, you saw that you had a profit. 0?
I understand. That is a series of, at risk 10, for example, out of 3, it says that percent. The situation in Cuba is already 12:34 in the morning. It is absolute horror. Loss. Although it was a full 10% up to the third series, a full 10% in the completely wrong direction, actually rolls all the way back to 23%.
Yes, now add 3 series of 10 upwards and you'll see that you'll still be in a pretty decent loss.
So 0, it turns out to be 0.9, and now multiply by 1.1 for the third one. Well, minus 3%. Well, that's a series of 3, it should be. So only the fourth series. If for 1, it turns out, if for 1, then the risk needs to be as much as 4
Times, wait, no, you calculated something wrong. If we lose 10% 3 times, we're left with 72.9.
Well, yes. And
What if we multiply back by 1.13 times? 1, 2, 3. And
like this, I was calculating something else. 3 times in a row, so that, and such specific movements almost never happen 3 times in a row like that.
that's exactly the point. You catch one profitable trade, a really good one, and it turns out that there are several losing ones, and then one good profitable one. This one good trade only becomes really good after a series. So when you want that kind of return, otherwise it just turns into a disaster.
Sadness and sorrow.
Well, shall we continue?
So tell me, what's your take on what might happen next in this situation?
But I'd rather just stay where I am.
All right, let's go. Almost.
Well, at least we're still operating in the black.
Maybe one more time.
I was thinking that maybe I just go ahead and click on it one more time.
Well, now it's rolling back, but I think it'll go further, up to the middle, to the average levels to prove itself. I would sell the call.
Look, see, here's where your mistake was. You sold a call for 4.5% of your equity, meaning you didn't use margin, you went all in with the risk, and you immediately lost 25% of your deposit. And as a result, the whole point was lost. In other words, you basically did what a beginner would do, like when a trader presses the wrong buttons sometimes. That's why, well, there are guys who teach trading really well, and there are methods from the States, real pros, and they recommend you absolutely have to do this. That is, you should calculate how much you lose on mistakes throughout the year, and you need to factor that in as well. Usually about 5 to 6% of losses definitely come from mistakes. In my case, I think about 15% went to mistakes.
Well then, in your personal opinion, do you honestly believe it is completely pointless to work on improving the interface to avoid such mistakes? It's possible,
For example, to strictly set it so that if you're selling, it's only on margin, and if you're buying, it's only as a percentage of equity. Well, in general, that does limit some flexibility. So maybe for beginners, you could make some kind of new interface like a newbie mode. So you get the idea.
all right, one more. It's going to shoot up now, right? It didn't take off.
See, right now, it's exactly after this little dip down. So a candle with a tail couldn't break through the average. I've often seen that after this, growth happens.
All right, let's see.
Yeah, there was something, but you see, it wasn't enough to. I think, look, here's the situation. Because of this candle, options are now very expensive options. And that's why.
Why? 0.55. On the contrary, they're cheap.
Can you look a bit lower? You have the premium chart, right? Higher there, the blue one. So again, cheap compared to what? So basically, if you look at the last however many weeks, well, they're not really that cheap after all. Well, maybe try buying a call again, for example.
All right, that's exactly 4.5. It seems that I have unfortunately missed the mark once again, despite all of my very best efforts to get it right this time.
But you see, it is actually somewhat of a miss, somewhat of a hit, but not quite there at the end of the day.
Yeah, to be honest, I think every single thing has already been completely exhausted around here.
Yes, but at the same time, notice how the average still worked out. So it's still nice.
At least there's some kind of system to it.
Yeah, at least there's something you can rely on somehow.
All right, let's do buy calls again. Now it might go further towards the averages. Okay, let's do buy calls. It'll bounce back up, and I'm quite sure it'll surge upward to at least 6 or 7.
But actually, when it hits the average, I don't really know. If you zoom out the chart, you can roughly see the duration of this trend, how long it's been going on already. So basically, if this is a weekly chart, then how many weeks are there here? Well, I don't know. Maybe there are about 100 or so. So you see, it turns out we managed to catch this average right here. Formerly, we probably could have caught it here as well. 1, 2, well, we caught it a little bit here. 4, 5, 6. Well, kind of one time something goes wrong.
Come on, buy put.
No, wait. That's exactly what I was about to say. On a falling market, the rebounds are pretty strong. So basically, it dropped down quite sharply. It's just that since you're already at 7 here, it's already, well, kind of hard to keep increasing. So in principle, you could make it to 14. I would try a couple of times at 7. And then if it drops down again, maybe I'd go in at 14. But right now, we're already on the edge because our risk is too high. Well, let's give it a try.
Those are calls, right?
Calls, yes? Well, you see? And that's because, for example, raising it from 3 to 7 is fine. Even from 7 to 12 is still more or less okay on the weekly. But 20 already, that's a different story. It becomes a very interesting kind of entertainment. Here, I think maybe it will hold.
Yeah? Let's do it. It's unclear. It was holding. Well, I don't know what's going to happen at all. I'll just sit without any positions.
By the way, that was a very sensible move.
Right now, I think it will hold. 6, I think it will hold. It's holding, but just barely. How many green candles in a row can there be? It's unpredictable.
You can take a look, see what it says here. Max without minus 1%, 29 bars. But basically, minus 1% in a week, well, essentially, that means 29 is quite possible. You can set it to 0. Set it. Try setting 0 in the threshold, for example. See, maximum without minus 0 is 12 bars. So basically, 12 weeks. It might not show any drop at all.
The tool, so it's already getting a bit scary. Let's do it here. Something should happen here too.
But I'm not saying that, unfortunately, during a rise, a sharp drop doesn't usually happen. Unless it's a really sudden explosive growth, but if it's a smooth rise, then most often it just starts to chop sideways.
So what will happen then?
It turns out sell straddle suffered, and it's small, very small.
Yeah, that's right.
And by straddle, well, I don't know. By the way, maybe by put, yes, since the options are cheap, in principle, you could probably try it. So it turns out that it seems like we shouldn't expect a big move. So we're in profit, right? That's it.
Come on, give it another push. Push it.
Oh, honestly, that is actually not bad at all, and it is certainly much better than what I was originally expecting to see here today.
Will it drop one more time? I think now it's going to move quickly. Will it drop? No. It'll stay put. All right, let's wait for 3, a couple of candles. But now I think it's going to crash.
If it crashes, then it's probably better to buy a put, not sell a call. And by the way, pay attention right now. Wait. Do you see the premium at the bottom? Now, what is the premium like? High or low?
Average.
Oh, and by the way, look, there's something else I wanted to draw your attention to. Remember I said we have draconian commissions? Pay attention to the difference of this amount? Yes.
I see that without the commission, it's basically nothing there.
Yes. Now let's look at constant risk again. Right now we have constant risk. Wait, go back. It's set at 7.3. Let's see what it's set at now. It's set at 3. Let's set it again. See?
Yes, I see.
So it turns out that because your trading is very unstable, at 5 you have a big drawdown. Let's try setting it, for example, to 1. See? So with 1 you could have earned more than with 5. Well,
amounting to a total
just 1% risk that turns out to be completely stress-free. You see,
this isn't fun or exciting at all.
I agree that...
Wait, let's get to that later. If I had used constant risk, I'd have 32 now, and you're telling me that with 1, I would have been up 4%. Right now, I'm not.
Less than you, just Cassandra. Why is it needed? First of all, it checks. Look, the only thing is, with constant giving away the whole commission, let's set it a bit lower too.
Which one?
So let's go ahead and adjust the value here to 5, and then over there as well.
The final value we are looking at is exactly 0.05, which is quite a small measurement.
Okay. See, constant risk is 11.4. Set it to 2%. I mean, the risk per trade.
Percent of equity or margin?
No, don't click it. It doesn't affect anything. It just recalculates with that coefficient what you did in each trade. And 21%. Let's set it to 3%. Let's see, now it's 30. So what does this actually mean? It means that if you use constant risk and have at least some commission, if your chart is positive with constant risk, it means that not only your Martingale, where at some point you just start doubling up, matters. Doing a martingale here shows that your forecasting actually has at least some meaning and you end up covering the commission. So you can use constant risk to see what the maximum risk you could have traded with would be. That is, you set the commission to 0 everywhere and then you try it out. This way you can see the maximum you could have done.
Trading with constant risk. You set it. Now look, the whole constant risk is 49%. Let's immediately set it to 10. You can trade with 10. As you can clearly see right here, the value has reached 74. This demonstrates that the figure is steadily increasing over time. However, if you were to manually adjust the settings down to 20, you would notice a different result altogether.
But here there would have been a trade that would have wiped you out, and most likely it's the head sales themselves. You see, it can't withstand it.
That's funny.
So this is basically a stress test for your system to see what you can and can't handle, what will lead to really bad consequences, and what, in principle, is fine.
Cool. I suggest we wrap up.
Yeah, I think it went pretty well. The most important thing is that we're in the black. Well, I mean, overall, like, it turns out you can read the chart at least somehow. I mean, honestly, when you finally gain a certain significant level of professional experience, you won't just be guessing anymore. I truly mean that when you observe things regularly, your overall quality improves quite a bit.
And won't additional indicators help here? If we add open interest here as well, add MACD.
No, all those MACD and other indicators that are derived from price, they don't help. Well, because basically you're using the same value and just presenting it differently, well, from the trend.
You mean from the trend?
If, for example, let's say you're trading options again, you have an understanding of open interest, you have an understanding of liquidations, and you have an understanding of what's happening in other markets. So, for example, if some other asset like oil appeared here, I mean, let's say you know what's going on with oil, gold, or I don't know what Trump is saying. Then, in fact, these are additional sources of information that really can also improve the quality of your forecasting. So this is the basic approach. If you can succeed even with just this, then you can actually improve further.
But indicators based on volatility, are they also considered price-based indicators?
Of course, basically anything you derive from price. So if you, I don't know, let's say you create a super complex equation based on price, even then it's still all coming from the same source. There's only one source of information.
Well, I mean, you could add some filters or something to reduce the noise a bit.
You can try, but I've noticed that, a beginner trader starts out with just a chart, not knowing about indicators. Then he learns about indicators, and his chart starts to look like a Christmas tree. You can't even see the chart anymore. He's got MACD, Ichimoku clouds, all sorts of Japanese candlesticks like hanging men and so on. He plays around with this Christmas tree for a while, but the money keeps draining away. And at some point, he's left with just two moving averages and essentially a volatility indicator that shows the price of options. And by the way, even the price of options is actually an external additional source. So when you understand how much options cost, you actually have an extra source of information about how the market is assessing volatility. That's how it is.
Well then, including this recording, let's add this thought. I have it now.
All right, let's stop the recording.